Geoffrey Dennis is with us, independent emerging markets commentator. Geoffrey, good to have you with us here. Good morning. Prashant this side. Thanks for joining us here on CNBC-TV18. So what's with all these tariffs, Geoffrey? Yes, we were talking about how but this was expected. Green exports out of China, EVs being tariffed higher, much higher. And by the way, newspapers in Europe are also reporting that EU is increasing tariffs on electric vehicles out of China coming into Europe quite substantially. Elections in the US 6 months out, but we're already starting to hear a lot of noise around this. Your sense, and could this become a bit of a risk?
Oh, I think it is a long-term risk for markets. I'm not sure it's necessarily a risk in the short term, but I think what's slightly concerning about it is that initially tariff increases were imposed by President Trump in 2018, and everybody thought, this is really bad news. It's a really poor way to run a global economy, and it runs the risk of global recession. Now, it seems that not only the Trump Republican Party, but also the Democrats are doing the same thing. And of course, you're seeing, as you rightly say, some talk about tariffs in Europe also. Now, I think this sort of reflects the way in which you're getting some disconnect between these big regions now. US-China trade has slowed right down, partly because of tariffs. And I think you have to watch this very, very carefully, because the economists would say, and I am an economist, that free trade is really the best way to go forward. So I'm watching this for the long term. I don't imagine it's going to be a problem in the short term, but it seems whoever wins the next US election, we're going to see more tariffs. And I think that's bad for the global economy over the long term.
Okay, Jeff, hi, good morning. How are you feeling about a market like India? We've had a great run so far, but we have a big event upon us, which is the general elections. And, the opinion polls or the narrative is swinging at this point in time. So there's no certainty whether the current government will come back to power in a dominant way. There is some volatility in the market now, but do you think this is a great opportunity to buy into India?
I think it is for the long term, but certainly in the short term, there are, I think, a number of uncertainties. And I would list a few here. Number one, as you say, the election. I was talking to a dear friend of mine, Indian friend, just yesterday, and he was saying to me, look, this thing is by no means guaranteed the BJP will increase their majority, maybe not even become the biggest, the next leader, the next prime minister, Mr. Modi, again. So I think that would be a big negative for the market in the short term. I think what's happening also is China is finally rallying. It's actually boosted emerging markets a lot. And there's so much debate amongst emerging market investors about, do I go to India? Do I go to China? Obviously, there's much more choice than that, but this is sort of India versus China thing. And China has clearly done much better this year, although India is a small outperformer as well. And then thirdly, and I think this is really important for, the fundamentals of the market, you will only, I think, see India doing really, really well here when you have a sufficiently weak US dollar that you do see a little bit more stability of the rupee, possibly even some sort of a rally, which will ultimately, given these pretty decent inflation numbers in India, allow the RBI to start thinking about interest rate cuts. And so I think those are all the uncertainties that are being generated right now in India. I still think it's a great market for the long term, but there are some uncertainties in the short term. Without any question, this, I'm sure, explains some of the bad news recently in terms of FII flows.
All right. Hi, Jeff. Good morning. Good to see you, Win. Jeff, our markets are not really prepared for any kind of shock or any negative outcome. We want to see continuity of the current government. So as of now, I don't think the markets are positioned for any shocker, but we take your point on board. Now, the toss-up between India and China, there could be some near-term headwinds for India. Valuation-wise, well, we're trading much more expensive than China as well. So in the near term, what's your preference between India and China?
I can see the Chinese market has got a bit of momentum here, and I think it could well outperform for a while longer. But the bottom line here is that the government in China is going to really struggle, in my opinion, to get the economy to grow at the 5%, about 5% target that they're talking about. And they've got massive, massive problems within the banking system, and in particular, of course, within the commercial real estate market. So I think the fundamentals much favor India here over China at this point. Now, India's expensive. It's always expensive. It's always more expensive than China. And one of the reasons China's done better this year is because it had 3 terrible years and it suddenly became very, very cheap. Over the long haul, given India's growth potential that is still there, given, I think, really quite reasonably stable currency performance, given how strong the dollar's been, and given that I think at the end of the day, we probably will get the BJP government coming back, but of course that's an uncertainty. This is still the best growth story within the emerging market. So over the long haul, I would far rather be long India versus China. It's just that right now we seem to be in a sort of a pocket of uncertainty about that, and China's doing well, but I think China's got a lot more long-term economic challenges at the moment than India faces.
Okay, China has a lot more economic challenges than India. So in the longer term, India is a good growth story. Got that. Jeff, thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your time here. That's the word coming in on the global market setup and how market observers are looking at it.